Good morning, everybody. This is the live market open for Wednesday, October 19th. Hope everybody is doing well. I'm Yohay Elam of Forex Crunch and Market Movers, doing the show as usual for FX Street. This time we're back to a live show, so your questions are, of course, more than welcome. Today, as always, we'll cover recent developments in markets, cover various charts and levels, preview the ECB, that's tomorrow, European Central Bank, update on the US elections. There have been some significant shifts ahead of the last presidential debate. Focus once again on pound dollar because it remains extremely interesting, of course, and preview the next week as usual. And of course, your questions are more than welcome. If you cannot see the chat box alongside the screen, please go to the address here, tlk.io/fxstreet-forex-live-video. Okay, so what's going on in markets? So we had some excitement over the OPEC agreement back in Algiers, basically some kind of handshake agreement between Iran and Saudi Arabia to curb oil production, but this excitement is fading. So oil prices went up, but didn't really, they did break above $50 a barrel in WTI crude oil, but they didn't move to higher ground. So the excitement is beginning to fade away. Russia said they'll jump in, but they're not so sure. In the meantime, production continues rising. So there's a difference between talk and reality. Hard Brexit talk that hurt the pound quite a lot. But now there's some hope for a softening. We heard from Mark Carney, said they're watching the exchange rate. And also there's a legal opinion saying that Parliament should have the last word on Brexit. And in Parliament, there isn't such a big majority. Actually, the majority of MPs in the UK Parliament are against Brexit. So it might be a bit softer. So the pound did stabilize after that big flash crash, but we'll focus on the pound in greater detail in the special segment. Next, another special segment is about what's going on in the US elections. Clinton victory is priced in after a Trump meltdown, a series of problems for the Republican candidate, put Clinton on top with a very big margin. 3 weeks to go, of course, anything can happen, but at the moment, a Clinton victory is priced in. And the US dollar has been dominant. Well, not in the past few days. We had a breather, but hawkish words from the Fed via the meeting minutes speeches left the dollar more or less in command. Again, we're seeing some kind of a correction, but we did see, for example, euro dollar finally breaking out of range. Okay, let's talk a bit about the data we had so far. I mean, in the data we had recently. And of course, your questions are welcome. So since the last time we had the show, I'll cover this data briefly. We had an okay jobs report, a small miss on the headline, 151,000 jobs gained, 2.6 rise in wages, exactly as expected, 0.2 month over month. Most of the data was just okay. Good enough, I would say, for the Fed to raise rates in December. So they didn't raise in September. They're not expected to raise rates in November, a few days before the elections, but it was good enough. Another, we're talking about the jobs market. Jobless claims continue declining. Now they're at a 43-year low. Once again, 246,000. That's another good sign for the US economy, but not all signs are that positive. Retail sales, a huge portion of the US economy. We had a strong headline, but a weak core figure. Also, that was retail sales for September. Consumer confidence for October was not that good. It came out under 90 points. Remember, it has some political influence as well. So the economy for politicians is okay. I mean, not supporting Clinton as the incumbent and not hurting her, sort of meh, as some people say. And also inflation looks the same. It was released yesterday. Good headline figure. As expected, oil prices are not weighing on prices too much, but a miss on core inflation had dropped from 2.3 to 2.2. So, well, good enough for the Fed to raise rates once this year in December, but not more than that. Elsewhere, in Germany, business confidence looks good, 6.2%. 6.2 points, sorry, and that's good news. In the UK, inflation is moving. In the UK, inflation is also is moving higher, 1% on the headline, 1.5 on core. So in the UK, it's not only oil prices that the effect is diminishing, but all prices. It's the Brexit effect. It's the effect of the weaker pound. And let's see if the Bank of England reacts next month. Inflation is moving up also in New Zealand. It's released on a quarterly basis, rises 0.2, but it doesn't totally take out the chance of rate cut. Chinese trade balance was okay, and tonight, just a few hours before the show, we had Chinese GDP came out exactly as expected, 6.7. Of course, the Chinese government controls this data very strongly. It's exactly in the middle of the range, exactly between 6.5 and 7%. No surprises also from industrial output, maybe a small miss there and a small beat in retail sales. Many people take the figures from China with a big grain of salt, but they still move markets. Okay, so even though you can be skeptical about the data, it still moves markets, even though everybody doubts it. Okay, so before we move to the charts, let's see if we have any questions. No, not at the moment. So let's move to the charts. So here we are on euro dollar. Currently 109.85. For long months, I've been venting my frustration about the tight range that euro dollar has traded in. So this has changed, luckily. Okay, we dropped off the 111.20. We reached lows. We dropped around 109.60, which was one of the levels seen post-Brexit. Not the post-Brexit low of 109.10, but low enough. Okay. This level was, and finally we had a breakout. So hopefully this will remain. I must say that after this big, you can see this double or triple bottom at 111.20. We now found some support there at 109.60 and further support at 109.10. Hopefully after some consolidation, we'll have another move either to the upside or to the downside. Further levels below 108.20 and 107.10. To the upside, 111.20 remains a strong line. Higher above, it's only 113.70, the high end of the tight range. Most of the range was just hugging the 112 level. Okay, but finally some kind of move there in euro dollar. Pound dollar, again, we'll focus on this more in depth later on. Of course, we have here on this daily chart the big Brexit fall. Then we had a long period of range trading. 127.90 to 135 was the wide range. Basically, we were closer to 132 for most of the time. Then we had another deterioration, talk of a hard Brexit, and then this big flash crash. We dropped under 120. The exact level is still in dispute. It happened in the thin trading hours between Thursday and Friday 2 weeks ago. Since then, this flash crash didn't leave, it still left its scars. The pound never recovered to the pre-crash levels. We did dip again, once again, to the 120 handle, and we've also seen a recovery towards 123. Currently, we're at the higher end of this post-flash crash drop, but still 122.80, lowest level since the beginning of 1985. Don't remember which singer was then had the biggest hit, but maybe it was George Michael. Anyway, we're at very low levels. I would say 123.20 is resistance and 121.80 support, 121 further support, still trying to stabilize over there. Let's move on. Dollar yen. Here we're seeing this strength of the US dollar I've been talking about, because it's not a risk off because of hard Brexit type of reaction, but it's rather strengthening of the US dollar. Once again, now we're seeing a breather. Now we're seeing the US dollar moving lower, some kind of profit taking. But in general, we've seen a higher dollar yen moved away from 100, challenged, even moved above 104. I still see 104.15 as the level of resistance, followed by 105. Support at 103.40. This remains a significant line. Further below, we have 102. Dollar CAD, the Canadian dollar, was unable to make really big gains on top of an excellent jobs report in Canada, and also rising oil prices. But maybe we have a rate decision today. Maybe we'll see it recover. Anyway, current levels to watch are 131.40 to the upside, 132.40, and 132.80. To the downside, we have 130, 129.10, and 128.30. Okay. Further below, below. Next chart, Aussie dollar. I can't say we had a big reaction to the Chinese GDP. Chinese GDP came out as expected. Anyway, support here at 76.60, followed by 76.40, 76, 75.30, and the very round number of 75. So the Aussie dollar is following the footsteps of euro dollar, at least euro dollar that we've seen until a few weeks ago, and very narrow ranges. To the top side, we have 77, 77.40, and 78.40, the cycle high. We did see Aussie dollar recover, a more hawkish tone from the RBA, but ranges are narrow. Anyway, if we move under 76.60, 76.40 is very close by. Kiwi dollar had its time in the sun, but then crashed, dropped to the 70 handle. Currently at 71.97. Resistance there at, 72 is not such a strong resistance line as it used to be. But let's try another level to the upside at 73.30, which capped the pair, and then 74.50, which was to the top side. To the downside, we have 71.60 as a stepping stone on the way down, 71 as a level to watch, and 70.40 as the last barrier before the round 70 level. If we fall under 70, 69.50 is the level to watch over there. Moving on, dollar Swiss mostly reflects the strength of the US dollar, or lack thereof. Anyway, we're currently at 98.95, just under 99. Support at 98.50, 98.20. Much lower support at 97 and 96.60. Okay. Remember that the Swiss National Bank intervenes over there. If we have a push to the upside, I would of course look at the very round number of dollar Swiss parity. All right. Euro Swiss is where they intervene usually. Swiss National Bank. So maybe they were asleep for a few days and they let Euro Swiss slide lower, but still we're very much within the very narrow range. Further support 108.50 and 108.30. 107.60 is what I see as the line in the sand for a bit more aggressive intervention. 109, 109.10, and 109.50 are levels to watch to the upside. Okay, a much more interesting cross is Euro Pound. Here we can see the flash crash in the pound, which sent this cross all the way to just above 92. Since then, we've stabilized, battling the 90 level. 90 is a pivotal line or resistance line at the moment. It's followed by 91.50, okay, which was the post-flash crash high. And then still looking for a new level here. So 87.70 is the next line of support. Euro Pound has certainly awakened, and moves here are quite significant. Next up, Euro Yen, highly traded cross, but not by retail traders. 113.75 is the current level. 112.80 is support, followed by 112. Okay, we've seen a gradual slide right here because of the fall of the euro, which was more pronounced than the fall of the yen that came beforehand. Anyway, 114.50 is resistance, followed by 115.80. Pound yen, very exciting cross, very exciting crash. Flash crash actually sent it. We've rechallenged the flash crash levels, 124 more or less. Remember, there are disputes about the actual low following the flash crash in all pound crosses. So we've moved higher since then. 128 is resistance, support at 126.80 and 124. Even higher above, I would say, I would note the 130 level because it's a very round number. Okay, so these are the levels on pound yen. Okay, and oil prices, which we also cover, we're trading above $50 on WTI crude oil, but we haven't reached the highs of 51.80. Okay, so we're basically at the top of the very wide range. Let's zoom out a bit. You can see that back in January, at the beginning of the year, when things were just before the big crash, oil prices, January, yeah. Anyway, we were at 52, and so we're just under this level at the moment, sort of creating a double top there. In August, we fell all the way to 39, and then the high was 49. So these are the levels to watch, and we have a break above 49, but not a break above the pre-crash levels. So oil prices are still looking lower. I've always expressed my doubts about, sorry, that was not January when we've seen these highs. It was more May. In January, we had the lows just around $26. Anyways, you can see we haven't challenged higher levels. We haven't, the big fall came in November 2014. Since then, we had a move all the way above $60, and that seems a bit far out at the moment. Anyway, $52 is a level to watch to the top side. Okay, so this covers all the charts we usually cover on our technical segment here. Let's see if we have any questions. Good morning, Ramon. Good morning, everybody. Let's continue to zoom out just a bit. Zoom in and continue to the next segment. Well, before I move to the next segment, let's talk about the events coming up today. So at 8:30 GMT, of course, we have the jobs report from the UK. It's for jobless claims are for the month of September. Let's see if we have some rise in jobless claims following Brexit or not. We'll have the unemployment rate and jobs and the wage figures for August. At 12:30 GMT, we have the housing data. It's expected to be higher than the previous months. It's a second-tier figure, should have minimal impact on the US dollar. Sometimes building permits and housing starts offset each other. At 2 GMT, we have the Canadian rate decision. No changes expected. They're not expected to rock the boat. We have different forces in Canada. The lower exchange rate helps the economy. Oil prices have stabilized. That's also okay, but we're expecting some kind of a decline in the housing sector following a big bubble, especially in Vancouver and Toronto. Anyway, the Bank of Canada is not expected to move rates, especially as the government, already almost a year in office, Justin Trudeau, is enacting fiscal stimulus, similar to Japan, different than in the Eurozone. Anyway, Thursday, tomorrow, a very long day. We have the Australian jobs report early in the morning, late at night, if you wish, between Wednesday and Thursday. 15,000 jobs are expected to be added in Australia, but the unemployment rate is expected to tick up. So expectations are for a mixed report. At 1 GMT, it's a mistake here. It's the third presidential debate, third and last. We'll focus on the US election soon. And this markets are paying more attention to the elections. At 8:30 GMT tomorrow, another big report from the UK, the retail sales one. It's for the month of September, already the third month following Brexit. Remember that post-Brexit data was quite all right, but the pound continues ignoring the data and watches political actions instead. At 11:45 GMT, we have the ECB's rate decision. No changes expected, but the focus is on Draghi's speech. Again, we'll have a special segment on that. At the same time, also have the weekly jobless claims in the United States and the Philly Fed Manufacturing Index. Draghi's speech, Draghi's press conference is, of course, far more important. And on Friday, Canadian retail sales had inflation at 12:30. So we have important Canadian events this week, and consumer confidence at 2 GMT from the Eurozone. Okay, to conclude the week, in general, the biggest day is tomorrow, beginning very early in the morning, European time, and ending, well, with Draghi's big press conference. So next segment is the preview for the European Central Bank's decision for October 2016. So a bit of a background. Last time we had the rate decision back in September. This decision was accompanied by forecasts and sort of a bigger decision. This time it's an intermediate decision, no new forecast, so no changes are expected. Last time what happened is that Mario Draghi, the president of the ECB, hinted about changes to QE, the QE program, the bond buying program, the money printing program, if you wish, of the ECB is expected to end in March, and it's getting closer. He didn't provide any details. The markets expect the ECB to extend the program beyond March 2017, even though the ECB doesn't have too many assets to buy. Okay. Since then, we had a contradicting report, taper talk. We had a report that QE might end. Okay, that we might have beginning in March, we might have the ECB beginning to taper bond buys from 80 billion a month. They're going to tick it down to 70, 60, 50, like the Fed did, until they finally end the program. That means scaling back, even tightening, if you wish, okay? But this was categorically denied, and it seemed like more of a theoretical idea. Once the ECB decides to stop the QE program, it'll change the dosage in order not to shock the patient, okay? But doesn't mean that it'll happen in March. Doesn't mean it'll happen now. That doesn't mean that the ECB is ready to do it. So in October, we might get, hopefully, more details about that, but it isn't sure at all, okay? So this will be a focus of the event. What else did happen since September? Inflation remains low, so oil prices, their base effect is diminishing, so headline inflation moved up to 0.4%, but core inflation remains stuck at 0.8. That means real inflation, real growth is still very much of a problem in the Eurozone. There's high uncertainty from Brexit. Remember, hard Brexit is also hard Brexit for the European Central Bank, for the Eurozone. On the other hand, Germany is doing well, employment continues falling, business confidence looks quite high. So that's the background upon which the ECB makes its decision. What can we expect tomorrow in the ECB's rate decision? Of course, no change, no new forecasts. We might get a hint for December. What do they intend to do in December? Scale down on QE, change the parameters, or extend it? That's quite of an open question. Another question that we'll get from reporters about the scarcity of bonds. Remember, the ECB is limited to bond buying, buying bonds with the minimum yield of its negative deposit rate, minus 0.4%. And some bonds have even lower yields, so they're not eligible for ECB buying. So there might be scarcity of bonds. Will the ECB begin tapering, as aforementioned, and the Italian referendum in early December regarding constitutional changes? Draghi might be asked about that because he's Italian, but will probably deflect any questions about that. Okay, same with questions about Greece, and it'll be interesting to see if they can offer anything new. In recent ECB events, we had the ECB, well, we had Mario Draghi calling on governments to do more structural reforms and fiscal stimulus. So far, it fell on deaf ears. Okay, and what about markets? What about the euro? So any hints that QE is about to end, that they're going to begin tapering in March, is euro bullish, because no more printing of money, or a gradual removal of this medicine, okay? But if they're going to extend it even forever, like the Fed did with QE3 before they announced tapering, it's of course bearish for the euro. I think that my baseline scenario is that no news means more uncertainty, and it means a weaker euro. And that could be good for Draghi, because Draghi wants a weaker euro. This pushes inflation higher, helps exports, And at this point, he wants more uncertainty. That has been the line in the past few months. So that's my baseline scenario: more uncertainty, a weaker euro. Remember that the euro is more dependent on the Fed and on Brexit. So all the talk of hard Brexit also hurt the euro, and the talk from the Fed that they intend to raise rates in December is pushing the dollar higher. These two events from Britain and from the US had a stronger effect on euro dollar than any euro-related event. Can Draghi steal the attention like he did in the past? Possibly. I think he'll strive for more uncertainty and show us the cards only in December, after the US elections, after he has more time to convince the members of probably extending QE. But at the moment, we don't really know what they intend to do. Okay, so that's the ECB preview. Let's see if we have any questions. No questions. So let's continue to the next segment. The US elections update for October 19th. I hope that what I'm saying now will not become obsolete very soon, because it's one of the wildest election campaigns ever. Not only, it's not my opinion, it's the opinions of experts following the United States elections. 2016 is very different from the previous elections of 2012, for example, between Romney and Obama. These are happier days between the Trumps and the Clintons in Donald Trump's wedding with Melania back in 2005. Another thing that happened in 2005 was a scandalous tape by Donald Trump. He was recorded saying basically that he can commit sexual assault because he's a star, he is entitled to do whatever he wants. That had implications. Some Republicans distanced themselves away from Trump. It hurt him in the polls. He was already down. Following the first debate, things looked bad for him. The second debate was very, very ugly. Trump denied any wrongdoing. He denied sexually assaulting women, and then many women came out confirming the assaults he basically admitted to doing. He was already in trouble for tax returns. I must say that also Clinton, of course, is in trouble because of the email leaks. Every day, WikiLeaks releases more and more emails from her campaign manager. Some really ugly and nasty manipulations are revealed there, but these normal political manipulations seem nothing in comparison to Trump. Anyway, bottom line, polls show Clinton leading by 7%, which is quite a lot. Looking to the past, and past performance does not imply future results. At this point in the race, Clinton's lead is significant and insurmountable, but this is not a normal election cycle, and anything can happen. This is the electoral map according to 538 by Nate Silver, a site that aggregates and models all the polls. They show an 87% chance of Clinton winning, which is very high, of course, and 7.1 at the moment percent lead in the national polls. Of course, what matters is states, but anyway, it looks like a big victory for Hillary Clinton. Markets prefer Hillary Clinton, not because they're fans of Democrats. They prefer Republicans, prefer a more pro-market, pro-business, but Clinton is a known politician, mainstream politician, and Trump is disruption, anti-trade, enlarging the deficit, and basically a wild card with problematic temperament. Okay, so anyway, what's next on the agenda? We have the last presidential debate, tonight, 1 GMT. It's the third and last one. The first one was described as a victory for Clinton. Trump was not doing well, and then he got in trouble for, many things. The second debate was just very nasty, basically ended in a tie. This one is hosted by Fox News. Okay, so it might be more favorable for Trump, but we don't know. They are pro-Republican, but mainstream, not always pro-Trump. There is a chance for a Trump comeback. It's his last expected comeback. Remember, most events that impact the elections are unexpected. It's not economic indicators. It's not non-farm payrolls. It's, as I said, 2016 is very different compared to 2012. Polls move very quickly. Okay, we had big fluctuations. Basically, every month looked different. Many voters are still undecided, voting for third-party candidates, or are disgusted by both candidates. Anything can happen. But there are already reports that Trump already seeks the next big thing, a media startup, a media enterprise, that he's already in touch with the next thing. That means he's already, admitting or thinking about a loss, or he never meant to take it seriously. Anyway, at the moment, it seems that, again, Clinton is winning big time. He's beginning to complain about the elections being rigged, and that's what losers do. Again, let's shift back to markets. Markets are paying more attention because we're less than 3 weeks towards the elections in the world's biggest economy, biggest superpower. Markets are pricing at the moment a Clinton victory. At this moment, if Trump wins, it'll be bigger than Brexit, okay? Because it has big implications on trade relations with not only with Mexico and Canada, but with the European Union, with everybody, with relations with Russia, you name it. Which currencies should we watch? We've seen in the first presidential debate a big impact on the Mexican peso. Trump promised to build a wall, and that Mexico will pay for this wall. So if Trump wins the third debate, it's bad for the Mexican peso. If he loses, it's good for the Mexican peso. We don't talk about this currency too much. Also, the Canadian dollar has some impact. Canada is a more diverse economy, and but anyway, Trump is perceived as bad for Canada, for the Canadian dollar, and Clinton better for the Canadian dollar. The Russian ruble, Trump has been sort of cozy with Russia, so the Russian ruble can act in the other direction. Trump victory, good for the ruble. Trump loss in the debate, bad for the ruble. And dollar yen, of course, the yen remains the safe haven currency. So if we see Clinton winning in the debate, at least in the next few days, continuing the lead, it's good for dollar yen. If Trump claws back, it's good for it's bad for dollar yen, good for the safe haven Japanese yen. Okay, so in the past few weeks, we've seen a big shift towards Clinton. It's basically priced in with markets, but anything can change. It's one of the wildest and ugliest elections seen in recent history. Okay, so that's a segment about the US elections. Let's see if we have any questions. No. Let's continue to the next segment. So once again, our currency of the week is the British pound, and it's going down, but maybe it has reached a bottom. Let's remind everybody what happened. Talk of hard Brexit intensified. Prime Minister Theresa May went to the Conservative Party conference, talking about more sovereignty, more control of immigration, hard Brexit talk, less negotiations for access to the single market. Okay, hard Brexit. And we also heard a retaliation from the other side. Donald Tusk of the European Commission said either no Brexit or hard Brexit, which I guess reflects the opinions of Angela Merkel and François Hollande. These might be negotiation tactics by both sides. And on the British side, it might be a move to please the people that voted for Brexit and the ministers in government that are from the Leave campaign, that were in the Leave campaign. But even if it's just temporary, even if eventually there will be a soft Brexit, the market did respond. That's the flash crash, and that's the weak recovery from the flash crash. Okay, but things never last forever. The flash crash sent again pound under 120, and the pound remains lower. The pound continued ignoring very good data points from the United Kingdom. and for retail sales, purchasing managers indexes, all things like that. But we had some hope in recent days from two fronts. First of all, the Bank of England's Mark Carney said that they're not indifferent to the value of the pound. That means if the pound goes too low, that means inflation moves higher. That means also exports are doing better. So the Bank of England does not have an immediate need to cut interest rates. And if the pound falls too much and they don't cut interest rates, the pound could rise back up. Secondly, political hope comes from more legal opinions. There's, of course, the people that support Remain, that supported Remain before the referendum, and that care about trade, of course. They are trying any legal channel to battle the Brexit, and they say that Parliament should have a vote. Now, we know that members of Parliament are mostly against leaving the European Union. People show that they do want to. Anyway, if it comes to Parliament, things are more complicated. So will politicians go against the will of the people, or will they go with their conscience? Things become more complicated, so the pound had a recovery. So I suspect that the pound might have reached some kind of bottom, okay, at least temporary bottom, at least for the next few days. Part of the fall also in the pound against the dollar was because of the US dollar strength. The pair remains at uncharted territory, but we might see things stabilizing, at least for now. Maybe the pound bottomed out, at least until the next problem. Let's look at the chart of pound dollar in this special segment about the pound. Mention some levels. 123.20 is the high so far. We're shying away from this level. Again, we're expecting big data in the next few days. Jobless claims, retail sales, and next week we have the Bank of England, which will be a bigger event. If the Bank of England does not cut interest rates, we could see maybe a break above 123.20, and 125 is the next level to watch. To the downside, we have 2280 is sort of temporary support, and look at a few stepping stones over there. 122.20, 121.80, and 121. Of course, the round number of 120 also works as support. So we had some stabilization. I suspect that the pound could move a bit higher, extending the correction if you wish, okay, before moving to the downside. Right, that's the special segment on pound dollar. Now let's preview next week's events. So on Monday we have, as it happens with many Mondays, quite an easygoing day. We have the Eurozone PMIs. Tuesday things become more interesting with the German IFO figure. That's Germany's #1 think tank. It has more influence than ZDU. Let's see if they're also optimistic about the German economy, about the Eurozone economy. We have the consumer confidence figure in the US on Tuesday, the Conference Board consumer confidence. It has political implications as well. If consumers are more confident, it's good for the incumbent Clinton. If they're less confident, it's good for the challenger Trump. Okay. On Wednesday, we have Australian CPI. I'm mentioning this in the preview because it happens only once a quarter. Okay, and it has implications for the RBA under new management by Philip Lowe is a bit more hawkish. We also have new home sales. New home sales and the wider economy usually go hand in hand. Things become even more interesting on Thursday with the UK GDP. It's the first release. It's the first release for the third quarter. Okay, the post-Brexit quarter. How did the UK economy do? Again, it's the first release, and there are two more, but the first one has the biggest impact. We also have durable goods orders in the United States, also an important figure because it reflects investment. And on Friday, we have some, for a warm-up, the German and Spanish CPIs, inflation figures. It comes a week after the ECB, and then the first release of US GDP for the third quarter. Remember, Q4 2015, Q1 2016, and Q2 2016 showed very poor growth, just above 1% annualized. There were high hopes for Q3, and this will be closely watched also for the elections. Expectations are for just above 2%, but these expectations have been trimmed down recently. This also has political implications, of course. If we have another quarter of poor growth, it'll be good for Trump. But voters, the economy is sort of in the middle, and the economy doesn't play such a big part in the elections this time. Okay, it's much uglier than did the Democrats do well, or did the Republicans? Can the Republicans offer a better solution? The economy is not such a major issue in the elections, but for the US dollar, for the Fed, it matters quite a lot. Okay, so these are the main events for next week, the week of October 25th to October 24th to October 28th. Okay, so we covered all the segments we had for this week. So now let's do a wrap-up of the show. This is a wrap-up for the live market open for October 19th. We had a few weeks of a stronger US dollar. And now we're seeing things moving back. Same thing with the pound. We had the pound flash crash and remain low. Now we're seeing some kind of recovery. The pound might have turned back up with softer talk about hard Brexit, and also with the Bank of England responding a bit to the weaker pound. In political news, Trump is melting down. Clinton victory is priced in, but anything can happen in 3 weeks, including the upcoming presidential debate and many other surprises coming from WikiLeaks against Clinton, coming perhaps from more problems for Trump. But we're seeing also signs that Trump is looking for the next thing already. Okay, these are the main things moving markets, and oil prices are not moving much higher. The OPEC excitement is fading. On the agenda, now we have the UK jobs report. It's expected to be stable, but you never know it. We're still talking about post-Brexit data. Today also we have the Canadian rate decision, worth watching if you're trading the Canadian dollar. Canadian dollar has shown a lot of weakness despite good data all around. Also worth noting, we just had Chinese GDP, which came out as expected at 6.7, did not rock the boat. Okay, next things we have on the agenda. Tomorrow is a very big day to watch out for. Australian jobs report, the last presidential debate, UK retail sales, which always has a big immediate impact. Let's see if it lasts. Remember, the pound reacts more to politics than data. And the ECB's decision, we previewed it in the show. Draghi is not expected to reveal too much. More uncertainty is good for Draghi and bad for the euro. If he talks about tapering, it's good for the euro. If he talks about extending QE, it's bad for the euro. That's sort of the bottom line of this big event, the Eurozone's, the ECB's rate decision. Okay, there's live coverage on FX Rate for this rate decision, and Friday is a more quiet day. Let's do a quick roundup of the charts. This morning, we're seeing euro dollar, just under 110, got stuck in a new and lower range, 109.60, 109.10, resistance only at 111.20, strong resistance. Pound dollar, 123.20, off the lows, but not going anywhere fast. Dollar yen, currently sliding quite a bit, actually. 103.48 is the current level. 103.40 is support, 104.15 resistance. Dollar CAD, very much in range between 130.80 and 131.40. Aussie dollar, very stable, 76.16. 76.40 is support, resistance at 77. Not much reaction to the as expected Chinese GDP, and the Kiwi dollar recovered from the lows. We had quite a roller coaster in the Kiwi, currently at 72. So these are the currencies. Currently, things are stable. Well, maybe apart from dollar yen, which is sliding. Again, we're seeing some kind of correction in the US dollar. Okay, so let's see if we have last questions. No more questions. So thank you very much, everybody, for coming. I wish everybody a safe and successful day in markets. Join the live the live coverage of the ECB tomorrow. Hopefully we'll have some action from Draghi. I'm very glad that Eurodollar began moving after a long period of being stuck in the mud. And yeah, and we'll be back with the normal morning show next week, same time Wednesday at 7 GMT, 9 a.m. in the old continent, 8 in the UK, just as European markets open. Okay, so that's it for today. Thank you very much and see you next time. Thank you and bye-bye.